Hey, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. And each and every week, we don't just talk about earnings, we talk about how to make money off of companies that are declaring earnings each and every week. So for this week, the week of November 17th, 2025, this is a big earnings week for traders, both through earnings and economic data. With the U.S. government back open, we're going to get a slew of economic data coming out this week. But big cap tech leader Nvidia will declare this week. All eyes are on Nvidia, and their earnings are going to kind of dictate how the barometer for AI moves forward. Okay. So we're expecting big things from Nvidia. We'll talk more about that in a moment. Simultaneously, we have companies like Home Depot, Target, Lowe's, Intel, and Target, and others all having earnings this week. So big names, lots of opportunity here as we get into stocks that are declaring earnings for the week. So let's get going. Now, each and every week we go through our list. Our list is comprised of two different types of stocks. Stocks that we think are going to move big, meaning double digits or more, and others that we think are going to move very little, meaning single digits. Now, that's not just us talking, that's market makers. Okay, market makers are pricing in options with their anticipation of what that stock is going to do pre and post earnings. Okay, so on the left hand side of the list, we have our potential 10% or more big winners. And then on the right hand side of the list, we have our quiet stocks, stocks or companies that we feel are going to move just single digits. And again, we're pricing that in with the market makers, looking back at historical results and combining those two numbers together to determine where these companies fall on the list. All right. Now, stick with us because I'm going to go over, each and every week we take from a company from this list and we do a trade on it. Okay. And we talk about that trade the following week, which we're going to do today. Okay. And I'm also going to give you a new idea for this week. All right. So you can see the big names here and also some companies you're not really familiar with. But let's start with the quiet side of the list. All right. Quiet candidates. These are going to be single digit movers. What we like to do here is we like to sell premium through mostly Iron Condors. That is an option strategy that is a net credit. Okay. You put it on as a credit. All right. And here's an example of what we call a quiet stock. This is Pfizer. Now, they had earnings earlier in the month. Okay. This is just kind of an example of a stock that's quiet. You can see Pfizer has been trading in a very small range for quite a while, well over a year. All right. And I've highlighted with the ellipse each and every earnings announcement. And you can see that this thing moves 1, 2, maybe 3% through that earnings announcement. It just doesn't move very much. So selling option premium is a great way to capture a profit through an earnings announcement. And we do that with a strategy mostly called an Iron Condor. Okay. There are some other strategies that we can do, but the Iron Condor is our go-to for this type of opportunity. So let's get to our list. And you'll see here, there's a variety of names starting today, but we really start looking forward to tomorrow, Wednesday, and Thursday as some big familiar names start declaring their earnings for this cycle. All right. So let's go to the charts and we're going to begin with Danos. All right. Now, this is a stock that is, I like these stocks that are $50 and above for an Iron Condor strategy. Part of the reason is option premium is usually elevated. Well, it's always elevated, but it gives us more choices out of the money. Okay. We like to go out of the money with our spreads, creating a box so that the stock can move within the box. You'll see an example of that here shortly. All right. So Danos will declare later today, Monday, November 17th, after market close. The average move here is about 4%. Okay. The stock just really does not move very much. So we're going to look for an Iron Condor on this particular stock. Now, here we are doing the show. You would need to get this trade off pretty quick during the day, but that's okay if you miss one because there's more opportunities that come right around the corner. All right, so let's jump to one of those. Okay, here's Baidu. Baidu will declare on Tuesday, November 18th, before market open. So first thing tomorrow morning, the average move here is about 7%. Now that's a pretty healthy move for a stock that's $115. But considering we see some stocks at this price move double digits, this is why we classify this as a quiet mover. Now, you can see in the past here that this stock has really, it's gapped up, it's run up. But the last earnings announcement is you see right here back in August 20th, and you can see the stock just barely moved. In fact, it gapped down, and then 2 days later, it was right back at the pre-earnings price. All right, so very quiet, not much at all. We're not concerned with the rest of the move. We're not concerned with all this volatility because it's a very short-term trade. Okay, we're talking 1 to 4 days is all. 1 to 4 day trade is usually kind of where we are in that arena. Okay, so along with Baidu, we have Lazy Boy. Yes, Lazy Boy. Okay, now this was once a pretty healthy stock, and it has really, as you can see from the chart, slowly just sold off, just churning its way lower. They're going to declare tomorrow, November 18th, after market close. The average move here is about 6%. Okay, so you'll see this move, less than $3. It's a $30 stock, so you'll see it move a couple of bucks. That's really about it. Yes, sometimes they do move more than their estimated move. That's why we talk about a plus or minus. Sometimes they'll move right at the estimated move that the market makers set, and sometimes they get it wrong, just like analysts. Not very often, not as often as analysts do, but sometimes the stock does move more or less than the estimated move for the stock. Okay, now big name coming out tomorrow is going to be Home Depot. Okay, now again, another pretty volatile stock. This stock is a $360 stock. They will declare Tuesday, November 18th, before market open. So first thing tomorrow morning. Yet the average move, even though this stock you see here has gone from about $425 down to $361 in the period of 2 months, it is still a quiet stock through earnings. We anticipate about a 3 to 4% move for Home Depot. And that is the opportunity that exists by selling premium because implied volatility is high. That IB rush, as we call it, rushes into the options. We sell that, and then we try to capture from the crush. Okay, the crush when IB just completely falls down. All right, and we look for to profit from that environment. Okay, so Home Depot tomorrow morning, and then we get into some of the other retailers here. We have TJ Maxx. They're going to declare Wednesday, November 19th, before market open. All right, the average move here is about 4%. Another good-looking stock, with it being about $146. Plenty of opportunity to sell premium above and below current price. Stock's in a nice rally, but we are not concerned. You can see the last earnings announcement. It actually gapped up higher, opened up higher, but then sold off and moved well within its estimated move. That's where it closed. So we're not concerned necessarily with the open of a stock. We're concerned with the close. All right. And so you can see here, this stock does gap around a little bit, but again, it usually stays within that 4% number. All right. For the day following. And that's what we look at for the opportunity here. All right. So, might expect a little bit of volatility for TJ Maxx. So, might watch this one, but we do have a good track record with selling volatility around this stock. All right. Now, Lowe's, okay, they will declare Wednesday morning, November 19th, before market open. And Lowe's, just like Home Depot, these are usually pretty quiet movers. And a 4% move is what's being priced in right now for Lowe's. You can see that last earnings announcement, kind of the same thing, gap higher and then close lower. It was up for the day, but just slightly, but maybe 1% on that last earnings announcement. The prior earnings announcement, about a 1.5% to 2% move. So this is all that we're expecting from Lowe's, even though, like Home Depot, it's gone from a recent high. I mean, it was at 275. Now it's at 227. Okay, big drop over months, but we're just looking for that earnings announcement. And then we get to Nvidia. All right. Now, Nvidia, believe it or not, it's on our quiet list. Even though all eyes are on, number one, their results, but specifically on the commentary that comes out from the CEO after the announcement. All right. They are looking for that forward-looking guidance. And so Nvidia will be declaring Wednesday, November 19th, after market close. The expected move here is about 6%. Now, at this current price of 186, it really does take a big announcement to move this stock double digits. All right. It's just kind of the way it is right now. It takes a lot to move the needle for a company as big as Nvidia. So that is why it's on our quiet list. All right. And then, believe it or not, two Constellation candidates. Okay, they didn't even make our list, but I do want to talk about them because they are big names. We have Target. They are going to declare Wednesday before market open, actually, Wednesday, November 19th. But the average move here, the expected move, is around 8.5% to 9%. Okay. And the reason why this is kind of a Constellation stock is because there are quieter potential movers and there are also bigger potential movers. All right. So Target kind of falls right in the middle, and therefore it was edged out of our list, but it's still a big name that we want to talk about. All right. And another big name that's on our Constellation list is Palo Alto Networks. Palo Alto Networks. They declare Wednesday, November 19th, after market close. The average move here is just 7%. So again, we have other stocks like Nvidia, 6% move, like Lowe's, expecting a 3 to 4% move. That's why those appear on our list instead of something like Palo Alto. But again, 7% move is really reasonable. You could go 8 to 10% out of the money and still get good premium to sell. And that is how we would bracket the trade, selling that premium. We don't do it naked. We always buy something further out of the money to protect what we sell. And then we look to profit from the IV crush, as I've mentioned. All right. And then as we move on through the week, we have Walmart. Walmart will declare on Thursday, November 20th, before market open. The average move here is just 5%. Another good candidate, trading $100 stock, moves about 5%. So you're looking at a $5 move. And look at how much time the stock spends just trading around in a range. Okay, as soon as it rallies, it sells off that rally. As soon as it drops, it rallies back up. Okay, just constantly staying within a range. All right. And then another retailer declaring on Thursday is going to be Ross Stores. They will declare Thursday, November 20th, after market close. The expected move here is just 7%. All right. So 7% for Ross Stores, $159 stock. Look at that nice rally this stock has been having. Okay. So a discount retailer, okay, discount clothing retailer, actually doing very well. All right. Right now in this market environment. But we're only expecting about a 7% move from the current pricing from the options that are in our list. All right. Now, I know we do go through a lot of stocks here. So keep in mind the chapter feature at the bottom of this video so you can jump back and see what we were anticipating for that estimated move, see if it happens or doesn't happen, and get in a rhythm of doing that research so that you know what to expect around these earnings events, because you can look at the option prices to see if there's any edge or any value in those options and decide what type of strategy you want to do through that earnings announcement. All right. So let's move on here and talk about our breakout candidates, because everybody loves these. Okay. The breakout candidates are very exciting. They move potentially big. Here's an example. One of my favorite examples is Akamai. All right. Just a historic mover. This thing moves 12 to 13% consistently through its earnings announcements. You can see the ellipse on the day of earnings here where the stock is really moving. It usually gaps, and it gaps pretty big, and we're talking double digits. Okay. 12, 13% for Akamai. Now, again, they don't have earnings this week. They had it a couple of weeks ago, and you can see that ellipse on the right-hand side there, right next to $86. That was the announcement. That was the earnings announcement right there. The stock did gap up. It went from about $73 to $86 in an instant. Okay. So we like looking at these, and we like watching these, and most of them you want to watch. And every now and then we find an opportunity. And what type of strategy do we like to do here? Well, we usually buy premium with a straddle or strangle. Now, yes, implied volatility has elevated. It is more expensive, but that's where we look for that edge when the market makers might be pricing in a 10 or 11% move, even though the stock historically moves just 16%. That's the edge. Okay. If those option prices are discounted a little bit, we can usually find a winner. So let's talk about our candidates for this week. All right. Now, trip.com, we didn't get I didn't get my little box here, but they are going to declare earnings. Let me just that might be, let's just get that up here real quick. I will get that. The symbol is not TRIP, it is TCOM for trip.com. And they will have earnings later today after market close. Okay. And the average move there, I'm just looking real quick. The expected move right now is 12%. Okay. Historically, the stock moves about 12%. So the earnings announcement will come in later today. All right. So there's today, Monday, November 17th. And the expected move is about 12%, and that's what the stock usually moves. So there's not really an opportunity here. This is, by the way, the last earnings event right there. You can see the nice gap and then rally up afterwards. That was a 14%, actually 15, just shy of 15%, 14.92% move right there on its last earnings announcement back here in August. Okay, so that's where the edge would be. If they're looking at 10, 11%, and all of a sudden the stock moves 14%, that's where you get the nice profit from. All right. Now, moving on, here's a stock that you're maybe not familiar with, but I love the name, BellRing, BellRing Brands. Now, this stock was once an $80 stock not too long ago. In fact, I'll bring in that data. I mean, look at this. This stock triple tops up here at 80. 1, 2, 3, just can't break through it. This is an earnings announcement right there. Oops. Right here is an earnings announcement. Okay. And usually I have these marked. And right here is an earnings announcement. All right. Those are the earnings announcement. And then the next one is going to be on Tuesday, tomorrow, November 18th, before market open. The expected move right now is 13%. All right. So they are pricing in. Actually, I think they were pricing in 15, 16% move, and the average is only 13%. So that's where you wouldn't want to do a trade. Okay. When the pricing is over what its average move is, that's almost guaranteed of a loser when you're trying to buy premium going into that earnings announcement. So you don't want to do it. Okay. Now we do this type of trade, straddles and strangles through um, our publication called Delta Neutral Breakout, and we will often avoid stocks, okay, to save our capital when this sort of thing happens, where the option pricing is above what the average move is. You don't want to do that, okay? So moving on through our list, we have Wix. Now, Wix, believe it or not, this is a pretty volatile stock. The estimated move here is 14%. Now, they're going to declare earnings on Wednesday, November 19th, before market open. So first thing in the morning, and an average move of 14%. Now, you can see last time it barely moved. It gapped higher during the day and closed lower. In fact, it almost didn't move on the day as a percentage number. This can happen from time to time, so you got to be very careful. But look, if we go back, you can see this is over a 14% move right here, literally going from 190 down to 150 overnight, okay, on an earnings announcement. So this stock has a history of bouncing around a little bit. I don't have the others marked, but just as an example, that's where it gets its average from. And right now, I just priced it out before we came on our show today, and it was sitting right around 15-16%. So no edge there on Wix, but that can change. All right, it could change tomorrow, and we get an edge. That's why we need to check really almost every day. All right, moving on through our list, we have Williams-Sonoma. They will declare on Wednesday, November 19th, before market open. Okay, a lot of stocks declaring in the morning this week. The average move here is just 12%. All right, so double digits for Williams-Sonoma. Look at this. It did the same thing that last earnings cycle, gapped higher, traded lower, and in the end, it just straddled the previous day's close. So this would not have been a good trade. But there have been others, like back here where, that was probably a good opportunity here when this thing gapped down for a straddle or strangle. But this is why we watch very closely and look for that option mispricing. All right. Intuit. All right. Now, this is still a $650 stock. So trading a stock that's this expensive with a straddle or strangle going into earnings, got to tell you, it's going to be for larger accounts only. All right. This would be a $7,000 to $8,000 trade. All right. So only larger accounts, say $100,000 or more, would be, able to trade this if you want to keep your risk really low. And I'm talking less than 5% of portfolio. All right. Now they will declare on Thursday, November 20th, after market close. The average move here is around 10%, and that's currently what's being priced in. All right, is around that 9.5 to 11. It's right in that window right now for Intuit. So it'll be definitely one to watch going into earnings. It is in a nice consolidation pattern here. Look at it just churning sideways as we go into that earnings announcement. But you can see the last earnings announcement, it did gap down nicely. All right. And it will do this. It will pop or drop pretty nicely around the earnings announcement. So if you want to just add time, add several weeks, looking at an option expiration off a few weeks, that'll be more expensive, but you have the potential for the stock to move around. Now, this stock did not, look at this, the stock did not move. Look how it consolidated. It moved from, 650 up to 700, yes, but then it came right back down, moved back up, and then back down. Stock almost has gone nowhere in a quarter. All right. So that is something to be concerned about going into this earnings announcement. And finally, we're going to close out with the Gap. All right. Now, this is only a $23 stock. This would be appropriate for smaller accounts. Believe it or not, this stock has an average move of 18% around earnings. They will declare on Thursday, November 20th, after market close. All right. The average move there is about 18%, as I mentioned. And yes, you can see what happened last earnings cycle. A lot of these stocks just didn't move anywhere, but they have a history of moving. I mean, that was a very successful trade right there. Entering into a straddle or strangle up here, and then the next day from 27.88, and it closed the next day at 22. All right, you're talking about a $7 move on a $28 stock. That's a big, that's a mover. Okay, we're expecting that same thing, about a 20% move maybe for the gap going into this earnings announcement. So that'll be a fun one to watch as well. All right. So if you like this content, please like and subscribe. It does help the algorithm and help us reach more traders like you. But we do talk about earnings and how to maximize returns from trading earnings. So each and every week, I take a stock from our list and I create an opportunity for you. All right. And we can go to that list right now. Let's take one more look at our list for this week. And you can see there's a couple of stocks like Post to Cereal that they declare on Thursday. We talked about TJ Maxx and Lowe's and Nvidia. So really Tuesday, Wednesday, Thursday, that's where the heart of the action is. And we do have a good potential market moving week. Let's just say that, especially with the retailers and Nvidia all combined together, and some of these tech stocks with the new government economic data coming out. It could be a volatile week. All right. Markets trading lower by 1% as I'm speaking right now on a Monday. So it's gaining momentum to the downside today. So we'll look for a little volatility for the week. All right. So how did we do last week? All right. So last week we actually did a trade on a tech stock. All right. That stock was Cisco Systems. All right. We did an Iron Condor. You see how the black line here on the risk graph, which is on the right-hand side, how that kind of brackets the price, the chart on the left-hand side. All right. And there's a thick blue line that runs through the last current traded price. Okay. And it runs over to the risk graph. And you can see we essentially created a box around it. That's where we sold premium. Every time the risk graph, that black line on the right-hand side changes direction, each angle, there's a strike price. All right. So we, bought like the 6750s and we sold, or maybe bought the 66s and sold the 68s, did a $2 wide spread, something like that. Okay. And we're talking puts. So bought the 66s, sold the 68s, and then on top, maybe sold the 77s, and then we bought the 79s. So every time that changes direction, that's a strike price. All right. So that is how we create these. So how did this trade do? Well, Cisco did show a little bit of volatility. It actually gapped up a little bit more than our expected move. All right. It didn't help that the day before earnings, the stock was traded higher. And then you can see where the earnings icon is right there in green, that it gapped up and it tested the upper part of our break even. All right. So we didn't panic. We waited a day. The next day, the stock traded, opened up lower, and then it began to rally. So we sent out a trade alert to our subscribers. We do this strategy through a publication called Delta Neutral Income. All right. And we sent out the alert, and the end result was a 36% return on risk. 36% return in just 2 days. All right. Now you look at this and you go, oh, profit of $102. That's not much. Well, based upon a hypothetical portfolio of $10,000, which is what we base this on, these trade sizes on. Okay, that's a 1% return on portfolio in just 2 days. In just 2 days. So just think, if you did a couple of these a week and then you did them for the month, I mean, you're talking about a very nice return on portfolio not as a monthly return, but then you annualize that out, okay, you're trading like the pros right there. All right. So, what do I have in store for you this week? Well, we're going to stick to our guns with all the opportunities out there for the quiet stocks. All right. That's what we're going to look at again this week. And we're going to do a trade on Walmart. All right. So, we're going to do an Iron Condor on Walmart. Same type of strategy as we did on Cisco. But I want you to notice, look how much time, literally since August, this stock has stayed within the break-evens of how we set up this trade. The break-evens are represented by the light blue line, the light blue horizontal line that's above and below stock price, runs over into the risk graph. All right. So we are selling a put spread on the bottom, selling a call spread on top, taking in that premium, and then we just wait. Okay. And we go through that earnings announcement. Implied volatility is already elevated. So we're selling expensive options, and we're just looking for Walmart to have its normal 2 to 3% move through the earnings announcement for that volatility to collapse. We call it volatility crush or IB crush. All right. And then that's how we will profit from this trade. So that's our trade for this week. That's our show for this week. I hope everybody enjoyed it. Remember, each and every week, we provide you with information, and knowledge is your best tool to success. All right. So keep up your learning, keep up your trading. Everyone have a great trading week, and I will see you right back here next Monday for earnings call. Take care.